This is Scott Whitwam with your morning real estate investor update. And today's top story, commercial real estate mix. As inflation remains high compared to the Fed target rate and softening labor markets, the Federal Reserve rate cuts are likely not far off. This may be good news for the commercial office sector. Office vacancy rates remain at a record high, setting up at near 14%. Highlighting the ongoing challenges. Vacated office space is still outpacing those being occupied, indicating the likelihood of ongoing softness in the commercial office sector. Contrast this with multifamily sector, which has benefited from elevated mortgage rates. Net absorption has risen to 90% higher than a year ago, leaving fewer units available to rent. Another strong indication of the elevated demand for multifamily is that fewer discounts are being offered on rental prices compared to what was available just 3 years ago. The top 5 markets include Dallas, New York, Houston, Atlanta, and Phoenix. In today's mortgage rate update, interest rates moved downward slightly last week, and according to Bankrate, the 30-year fixed rates have remained flat this week in anticipation of a Fed rate cut. It has been reported that the number of mortgage applications has increased significantly, with refinances outpacing buyer application as homeowners turn to equity to pay off high-rate credit cards and consumer debt. On the other hand, buyers may be waiting to see if the Fed makes a move on rates, and it could bring the current mortgage rates even lower, creating more purchasing affordability options for buyers. I think these two factors are working against each other. People who refinance are going to be less likely to sell in the short term, and many owners with low interest rate loans may need to see rates much lower before trading up to higher interest rates. Bankrate is reporting that the 30-year fixed rate mortgage national average this week is at 6.43%. In today's wrap-up, September is a month of volatility. Even without a presidential election, September always seems to bring a little excitement for investors who choose real estate stocks over individual assets. If you're invested in some type of real estate stock or investment trust, then this could be a bumpy month for you. My great advice is always rely on the fundamentals of the investment. And unless there's some significant reason to change, don't let September market volatility drive you in your decision making. As I've been watching the ticker this week and seeing various companies run deep red and then green and then back to red again, it is an indication that more uncertainty with regards to financial policy remains with an election looming. Full disclosure, I no longer have real estate holdings in the stock market, but I still evaluate, because that's not to say I wouldn't add them to my portfolio if it fit with my goals. There are often great deals amidst volatility, so this may be a good month to bolster some real estate holdings. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.